So welcome everyone to this class in banking, the introduction to banking. Before I start, I will talk a little bit about the course organization. We need to make up for two lessons. I'll talk about that at the end and give you some background on the overall module, what we are talking about, what it looks like. As you can see from the, well, actually from the very first slide, this is an introduction to banking. So we'll start from scratch, meaning that we'll start discussing what is a bank, what is the legal definition of a bank, what is so special about a bank that we need to talk about banking more in detail rather than, let's say, shoe manufacturing or selling shoes on high street. Banking is special, so that's why we have a special lecture for it. That's what we'll start with. German banks, definition of what is a bank, the German banking system. Now, there are probably a lot of Erasmus and exchange students, and you will not know anything about the German banking sector. Banking is special from country to country, so this might be of special interest to you because you learn a little bit about one of the things that makes Germany stand out and makes Germany different from other countries, even within the European Union. We'll talk about central banking, another aspect that is very specific to banking, in the sense that the government and the state influences how banks can do business, and they change the way banks can do business. It's different than, for example, in car manufacturing, where the government doesn't have a central car manufacturer, but in banking we do have a central bank. We talk about business models, what kind of business models we have, how you can earn a buck in banking. We talk about financial accounting. Again, banks have special accounting laws, and accounting is different for banks than for other industrial companies. We talk about risk management. Banks engage heavily in risk management, and thus we actually do have a whole lecture just devoted to risk management next summer term. And banks are regulated. So we have the central bank and we have regulatory authorities. In Germany, for example, BaFin, the German Federal Supervisory Agency, that keep a lookout for anything fishy going on in the banking sector. And that is also special. We do not have a supervisory agency for shoe sellers. We do not have a supervisory agency for pizza bakeries. So banks are very special in that sense. Just like the energy sector, they are regulated. And last but not least, I want to talk a little bit about the US banking sector and the UK and the Japanese banking sectors, because they are of special interest. They are different, and they have seen their fair share of banking crises that have had a profound impact on these economies, and that's why we need to talk about especially the US banking sector. But before I start talking about banking, let's talk about this module. It's a 5 credit points module. It's an elective class in our bachelor degree in economics. Let me just check, is everyone studying for a bachelor's degree? Any master students? That sometimes happens with the old mathematics and economathematics degrees, with a diploma. No? Okay. So everyone's studying, yeah. You're still in the diploma, okay? But you can take the class anyway. We have a 2 hours lecture right now here, and there is a 1 hour tutorial. You will get some information on that later on. It's meant to give you special preparation for the exam. And it's a written exam, 60 minutes in person. Finally, we are back to normal. No more pandemic-style take-home exams, nothing electronic, just a good old, regular, traditional written exam, 60 minutes for everyone. So exchange students, math students, economics, bachelor, etc. Everyone takes the same exam. You can take the exam, those exchange students. There is no Erasmus term paper. Please take the regular exam, and take note of the fact that But there have been instances where exchange students came to me and said, okay, I took the exam, I failed the exam, I now have to take the resit exam within the next 2 weeks, otherwise I will be expelled from my home university. And that's not going to happen. If you fail the exam, you have to take the resit exam next semester, and there will be no situation where you will get special treatment, that you get an exam just for yourself, etc. And if you do have the slightest possibility of getting a problem at home if you fail this class, please come to me before, let's talk, and let's make sure that you pass the exam. Yeah? So I've had this case before. Yeah? One student came to me, wrote me an email, I'm back in my home country, and if I do not take this exam within the next 2 weeks, I will fail my degree, which is just a very extreme situation, especially taking this as a bachelor's degree. Okay, resit exam, end of the summer term. So please take note of that. You can look up all the material on the Moodle class. The lectures, as you are aware of now, is recorded. I will put it up on YouTube, on my YouTube channel. You can also watch videos from previous years on YouTube. There is not such a big difference between the previously recorded lectures from previous years and this one. I might have improved, I might have deteriorated with age, I don't know. It's always a little bit different. There are different questions. I can talk about different examples. Maybe it's a different time of year. I'm pretty sure my performance during the pandemic wasn't the best. So you can watch some videos on YouTube. If you go to the next, I'll talk on the next slide. If you have some questions, write me an email at lehre.banken@wifa.uni-leipzig.de, and you can come to my consultation hour Tuesdays between 1:30 and 2:30 by prior appointment via email. You can watch, starting already 2 hours of lecture. I've just had 2 hours of lecture with 400 people. Always strains the voice a little bit. If you click on the icon, you can watch those recorded lectures from previous years. But I'm a little bit sneaky. This is not a link to the videos. This is the link with which you can subscribe to the channel. I need subscribers. Why do I need subscribers? Because I'm just 120 subscribers short of 10,000. And even now, I have the largest YouTube channel of the university. It's larger than the university's YouTube channel itself. They only have 9,000. I have 9,800. So let's make history. Yeah? It doesn't tell you anything about the quality of this channel. It only tells you how unprofessional our YouTube channel by the university is. Yeah. The Instagram channel by our library is perfect. Yeah. Subscribe to their Instagram feed. If you want to receive job ads for internships, jobs, etc., you can subscribe to our mailing list for job advertisements. The nice thing is I don't need to spam you via Moodle. If you want to receive those ads, please subscribe to the mailing list. Some basic literature. Students always ask about literature. Now, the first thing you will notice is the slides deck has 641 slides. So if there is anything I talk about that is not already on the slides, I don't know how I should put it into these 14 lectures. Now, you don't need a textbook. If you desperately want to read more about this, you can take a look at these textbooks. Unfortunately, they're in German. If you are not fluent in German, you can use this as a nice exercise to practice your German. The first one is Bankbetriebslehre by Hartmann, Wendels, Pfingsten, Weber. This used to be the standard textbook in Germany. Why? Because Hartmann Wendels was a professor at the University of Cologne. Pfingsten is in his last couple of years at the University of Münster, and Weber was a professor at the University of Mannheim. So the big three famous management schools in Germany, and they teamed up and they wrote a textbook on banking. It is okay. I think one could do better now, but some parts of the lecture are based on this book. There is one by Eilenberger, Bankbetriebswirtschaftslehre, pretty old actually. I'm not quite sure if there is a new one. This is, the first one is for university students. The second one is somewhere between Berufsschule, so intern training, in-job training, and University of Applied Sciences. This is much more hands-on, practical stuff. The first one is university level. So you can find more practical stuff in this textbook. And again, you don't really need this. What am I trying to achieve in this class? I want to give you an introduction to banking, because usually if you study economics or if you study management, banking is one of these parts that most of the time you will not learn. It is too specific, it is too not unimportant, but it is too specific to put in a regular, normal curriculum for everyone. Just like insurance management. Insurance management and banking are two of the fields that we do not require all students to take, because if you don't want to go into banking, why should you learn about banking? It's even more extreme with insurance. If you don't want to work for an insurance company, you don't need specifics of the insurance business. Yeah? Same with banking. But banking, I would say, is, of course, it's more important than insurance. What else am I supposed to say? The problem is that banking can have a profound impact on the economy via central banking, banking crisis, financial crisis. So especially if you're interested more in economics rather than management, it is a good thing to know about the business of banks, to have a better understanding of monetary policy, central banking, financial economics compared to just management. Thus, we need to know a little bit about the basics of banking. We need to know about the German banking sector and discuss some theories why banks are about, why banks exist. This is not trivial. Discuss the laws and regulations that concern bank, a little bit about risk management, and learn a little bit about not just central banking, but the US and Japanese banking systems. Okay. Any questions so far concerning the course outline? Anything you need to know when it comes to the course organization? Okay, then let's start. What is a bank? We will first go over some pretty basic definitions of what a bank is. And in general, we start with an economic definition. In general, banks are companies that take on deposits and grant loans. So you take in deposits. What are deposits? You will notice that every now and then I will put in some German words for the German students, because I'm pretty sure you know the German word, but you have never heard the English term deposits. What are deposits? And in German you can also say Depositen, which doesn't help. Spareinlagen. Depositen, Spareinlagen, also das, was Sie auf den Sparbüchern liegen haben. Deposits is capital that is in savings accounts, in people's checking accounts. So if you, as a private household, go to a bank and you open a savings account and you want to earn, let's say, 2% interest on your savings account, you are giving deposits to this particular bank. And the bank now holds your deposits. On the other side, the bank will go and use the capital given to it by you as a customer, as a depositor, and it will grant loans to other people and firms. And basically, that's the very start of banking business, taking in deposits and giving out granting loans. Now, banks do much more. And we have banks that do not grant loans and that do not take on deposits. Those will later on be called investment banks. But more generally, you can define banks trivially by saying, well, banks are companies that offer banking services. It doesn't help, because now you have to define what are banking services, but actually that's the way it's done in German law. We will later on see that banks, credit institutions, that's what we call them in German law, under German law, credit institutions are companies that offer banking services, and then they list all the banking services. We'll come to that. But in economic theory, in financial theory, you can also define banks more generally as some companies that interact in a financial market. Financial markets are markets on which financial contracts are traded. And financial contract obviously is the most basic way of defining what we are doing here. It's some kind of transaction, it's a financial contract, and those represent claims to present or future payments. Okay, financial contract, those are traded on the financial markets, and somehow banks engage in financial markets. In simple terms, financial markets are the place where lenders and borrowers meet. Now, banks are companies that engage in a financial market and offer specialized financial contracts. Every time we have someone who is in need of capital and someone who grants capital, we come closer to what a bank is really offering. So we might also look at a trading platform, but actually the bank itself appears on this market. The bank doesn't facilitate the contract. This is the difference, for example, between a bank and a stock exchange. An exchange is just facilitating contracts for others. The bank itself grants the loan. The bank itself takes on the deposits. What you will also find is the definition that banks are financial intermediaries. In German, we have the same word, Finanzintermediär. A financial intermediary, in a strict sense, is an institution that receives capital from lenders and passes it on to borrowers. Somehow it facilitates this, but actually it takes capital on itself and passes it on to other people. In a more broader sense, a financial intermediary only makes trading financial contracts possible or easier. Now, this would be a stock exchange. Obviously, a bank is a financial intermediary, but rather in the strict sense than in the broad sense. This is the idea. We have capital providers, we have capital seekers. They have a balance sheet, very simple, stylized toy example of a balance sheet. They have equity, equity and debt. They hold real and financial assets. And the bank takes on capital from capital providers. You, as households, if you open a checking or savings account. And we have other people and firms who are in need of capital. And why is this a problem? Can you give me a very practical example why we need a bank? Now let's start. I don't want to be derogative, I don't want to be offensive, but I assume you don't have too much capital. You're students. Some of you might have worked before your studies, but the general case is you don't have too much money. I, on the other hand, I'm old and I'm a professor. I probably have more capital, but I also have larger needs. I want to buy a house. I want to buy a fancy car. Okay, I don't have that much capital, but all of you have a savings account. You put in, let's say, 1,000 euros in your savings account, and I want to finance my new Tesla or Toyota. No, brother, I'll go with Toyota. Now, what is the problem? Or what are the problems? You have the capital, I need the capital. What do we do? Now, first thing is the amount of capital you have and I seek, they don't match. You have too little capital, I need a lot of capital. So, what do? You team up. And I need to bring you into a room and say, I need capital. You're here for another reason. You want to lecture. You don't want to invest. So I need to bring you into this room, and I need to tell you I'm offering 3% interest if you give me 1,000 euros, each one of you. And basically what I'm doing is I'm looking for contract partners. I have search costs. I might have not enough capital to buy a fancy car. I might only buy a small car, so I need more capital than you have. And the problems start getting bigger and bigger. Some of you don't want to invest. Some of you want to invest only 100. Some of you want to invest for a year. Some of you want to invest for 10 years. Some of you want more or less risk, more or higher or lower interest rates. So what do? Ideally, we have someone like you, and you open a bank. Just like Lucy in the Peanuts, you open up a stand and you say, I'm now a bank. You're not offering psychological stuff. You don't know Peanuts anymore. Lucy offers, it's Lucy, she's offering psychological services. You open a bank and you say, okay, I take in deposits. I offer 2% on the deposits, and you grant me a loan for 5%. Now, in this very simple example, you want to make a profit. You finance your investment by using deposits for 2%, and you grant a loan with 5% interest, and you make 3% profit. What is your job as a bank? You need to you need to coordinate our problem here. We have a coordination problem. You have the capital, I want capital, I need to find you, you have to find me, you have more or less capital, etc. So a lot of coordination problems, and this is the very start of banking. You all know that we have one bank, you go to the bank, I go to the bank, and we solve our coordination problem. And the bank makes a profit of acting as a financial intermediary. Yeah? It intermediates. Now, it's not as simple as that. We do have more way and much more way to go to arrive at a theoretical and scientific solution of why banks exist. But at least in this very intuition, it makes sense that we should have a bank that acts as a financial intermediary between all of you and me as the financiers and me as the person who needs capital. Okay. Now, that's just theory. Let's talk real stuff. Let's talk legal. Legally, again, it's very simple. Just look at the German Banking Act. This is a translation. It's not called German Banking Act under German law. Under German law, it's called Kreditwesengesetz, or the Gesetz über das Kreditwesen, the KWG, KWG. That's the abbreviation we use, Kreditwesengesetz. That's what I translated into German Banking Act. You will notice that every now and then, it's a hard job to talk about the German banking system, German banking law, and German banking regulation in English. I apologize for that. This lecture used to be in German. I was asked to offer it in English. It's fun to do it in English and to open it to exchange students. But as soon as I have to talk legal, this is quite awkward. Yeah? Again, German Banking Act, Kreditwesengesetz. Normally I would say paragraph 1, Absatz 1, Satz 1 KWG. Now I have to say paragraph 1, section 1, sentence 1 of the German Banking Act. Yeah? Okay, they define credit institutions. We wouldn't use that word in English. It's Kreditinstitute in German. Yeah? Credit institution, lending institutions. It defines companies as credit institutions if they offer banking services. And in paragraph 1, section 1, sentence 2, it gives an exhaustive list of banking services. The first one is deposit business. Also very awkward translation, Depositengeschäft. And in German we call this Depositengeschäft. If you accept deposits, you are a bank, full stop. There is no discussion legally if you are a bank or not as soon as you accept deposits, you are a bank. Why is this important? And I stress this because 8 years ago, when I started here at Leipzig and I did this lecture for the very first time, this was one of the most boring parts. I said, yeah, legal stuff, there's a bank is a bank is a bank. No one cares about that. But now this is quite relative. Why? Any idea? Yeah?
Is it because now like Starbucks and Apple have these cards?
Yes. Not just Apple and Starbucks. Very good example. As you might know, all the big tech companies are legally also a bank. If they want to operate, for example, in the European Union or in the US, especially in the European Union where regulation is much tougher, if they want to offer something like Apple Pay, Google Pay, they have to register as a bank. We'll come to that later on because this is a banking service. But you don't have to look at the big tech companies to see that it's quite relevant in practice. Why? Just look at the very, very small fintech startup companies. If you look at fintech, financial technology startup companies, who just starting with 2-3 people maybe, offer select banking services. And they don't want to feel the big hammer of financial supervisors. And they don't want to be regulated as a bank. They are trying to find some loopholes here as to not be legally a bank. So if, for example, you rent that office space and you say, okay, I want to offer something in fintech, and you design an app, you're not yet a bank. But as soon as you offer that app and you start accepting deposits, you are a bank. And this is very, very important in practice. Because as soon as you're a bank under German law, you are subject to regulation by the European Central Bank in some cases, German Deutsche Bundesbank in any case, and the German Federal Financial Supervisory Agency, and it's a completely different game for you. So the regulatory burden is extreme. So that's why many fintech companies look at this very first paragraph of the German Banking Act and look for some loopholes and sometimes even advantages of being a bank or not being a bank, because there are some advantages, of course, attached to this. So this no longer is just legal mumbo jumbo, but that's actually is, especially for startups, very important. If you take in deposits, you're a bank. Pfandbrief lending, Pfandbrief business. Oh, this is very German. What is a Pfandbrief? A Pfandbrief, there is no English word for that. Yeah? Just like Schadenfreude. Interest-bearing security issued by a mortgage bank next to the solvency of the issuing bank. In case of insolvency, there are also additional collaterals. A Pfandbrief is a special type of bond in which not only the issuer guarantees payback, but you also have additional collateral, usually mortgages and real estate. So these are considered to be extremely safe. I have no idea why there is no English word for this, and for some reason many German companies use Pfandbriefe as a source of financing. Well, that's 1A. Lending business. If you grant a loan or acceptance credits, yeah, Akzeptkredite in German, or anything else that is akin to lending, you are a bank. Diskontgeschäft, discount business. If you purchase bills of exchange and checks, that's really very specialized banks who only engage in this sort of business. You're a bank. Financial commission, you're a bank. Safe custody, administration of securities for the account of others. If you open a trading platform or if you're a trading company and you hold securities for someone else, ja, also Wertpapiere halten, ja, und Depotgeschäft, you are a bank. Central Securities Depository, safe to say you're a bank. Business of loan acquisition. If you buy loans from other companies for a business, you are a bank. Guarantee business. If you give guarantees, Garantiegeschäfte. This is important in export business. checks, underwriting. Okay, this is important. And finally, e-money business. This has been repealed from the German Banking Act. This is one of the parts which I had to look up before. E-money business. 8 years ago, when I first wrote these slides, I had to talk about e-money, way before Bitcoin, crypto, etc. But what is e-money? Any idea? What is e-money? Is this e-money? If I open up Apple Pay? If I pay with my formerly Maestro card, what we in Germany sometimes still call EC-Karte, Euro check, Maestro card, is this e-money? Technically, no. Legally, no. What are you doing? Is a credit card e-money? No, it's not. It's electronic cash, yeah, in a naive way, but this is not e-money and still isn't e-money. What you're doing with your card is you're going to a shop and you say, well, I want to buy this. I'm using my card, so I'm giving you the card and you can get the information from my bank account from this card, and I'm authoring a bank transfer from my account to your account electronically by using this card and my PIN. This is not e-money. This is just an electronic bank transfer. Legally, it's the same as if you would just wire the money. But e-money, it didn't work in Germany. What e-money is, for example, our Savings and Loan Association did this 10, 20 years ago. 10, 20 years ago, they offered the possibility that you save money electronically on your bank card. And this was called e-Geld, e-money, electronic money, e-Geld. And if you still have one of these old cards, you can see on your Sparkassen-card or your bank card, you could see the symbol for Maestro or EC, Eurocheck Maestro. That's what we use all the time, paying by bank card. That's the debit card. And a second symbol for e-Geld. And what it meant was that you could transfer money from your bank account permanently to this card. It was saved on the chip on that card. And you could, for example, pay at a cigarette machine. I think that's the only, for a time when we forbid people, no, I have to start again. You could pay, for example, in a train using this e-card, this e-Geld card. But no one used this. The problem is with e-money, and that's the difference. If you lose your bank card, no money is lost because there has been no transaction. With the e-money card, with the e-Geldkarte, the money is saved permanently on that chip. And if you lose the card, the money is lost. That's why we needed a certain clause in our German Banking Act to make clear the difference. Because suddenly, money is transferred electronically. And this has been one of the precursors of Bitcoin, crypto, etc. Yeah? Obviously, it was secure on that card, but no one used that. Because of the importance nowadays of e-money, real electronic cash, Bitcoin, crypto, etc., this part was repealed from the German Banking Act, and we now have a separate law that is only concerned with crypto and e-money. I'll say it in German. Ist jedem noch klar, was E-Geld wahr ist? Ist tatsächlich diese E-Geld-Karte, die keiner von uns benutzt hat. Ich kenne nur den Fall, dass Leute damit irgendwie zum Zigarettenautomat, also anders. Ich kenne den Fall nur, dass man damit das eigene Kind, das noch keine 16 oder 18 war, mit der E-Geld-Karte zum Zigarettenautomaten geschickt hat. Ja? So war das bei mir der Fall, bei meiner Mama. Ja, so, die hat ja? Naja, okay. E-Money. Counterparty business. Counterparty, we'll talk about counterparties later on. This is more complicated. Counterparty business, let's talk about that later on. Now, credit institutions. Everything that takes on deposits is a credit institution. However, there is banking and there is other banking. For example, if you were to offer checks and if you were to accept checks, I, as a German financial supervisor, would say, well, yeah, just do it. No one uses checks anyway. You can do whatever you want. Yeah, you're a credit institution, you're a bank, given that. But apart from that, you're not important, done. But as soon as you take on deposits, you are a bank in the true sense and you need to be regulated. I need to make sure that you don't do anything fishy with customer deposits. That's why German banking law says, we do have credit institutions and we have so-called deposit-taking banks. If you are a bank and you take on deposits, you are a special type of bank. You are a deposit-taking bank. The Einlagenkreditinstitut. Why do we need this special case? Why does the German banking law say, well, we have banks and we have deposit-taking banks? One and only one reason: customer protection. Deposits are special in the respect that if you lose deposits, you will lose people's money. And you will not lose the money of Deutsche Bank or Commerzbank or Morgan Stanley, but you will lose money and capital from households. And that's why we need special, tougher regulation for deposit-taking banks. Einlagenkreditinstitute haben ihr Geld, ihre Spareinlagen. Und wenn ein Einlagenkreditinstitut pleite geht, verlieren sie ihre Lebensersparnisse. Deswegen werden die stärker beaufsichtigt und müssen stärker reguliert werden. Deswegen die Unterscheidung Bank- und Einlagenkreditinstitut. Securities Trading Bank, Wertpapierhandelsbank, Wertpapierhandelsunternehmen. Securities Trading Bank is a credit institution which operates financial commission business and is not a deposit-taking bank. Well, if you only trade in securities and don't take on deposit-taking, we can have different regulation for you. So you are trading in securities, but you're not a traditional deposit-taking banks, different set of regulations. And e-money institutions, I actually have to check if you still have e-money institutions. If you only have e-money, then you can be regulated differently. That's the distinction we had, at least. Okay. The terms bank, banker and savings bank, Sparkasse, that is, are legally protected by paragraphs 39 and 40 of the German Banking Act. Why? You can't just say, I'm a bank now. Yeah? You can obviously always say you're a banker. I'm a banker myself. I do research on banking. You can call me banker. I don't care. But as soon as you enter business, as soon as you enter a market and call yourself a banker in your firm name, in your company name, you need to have authorization by BaFin, the German Federal Financial Supervisory Agency. Bundesanstalt für Finanzdienstleistungsaufsicht in Bonn und Frankfurt. Why? Because you can't call yourself a doctor or a physician. You can't call yourself a psychologist or a psychological therapist. Those are names that are protected under law and restricted for those who have certain qualifications. In the case of a bank, you need authorization and a license to operate, and that is granted by BaFin. Same with credit union. Now let's make one thing sure. May I ask from which countries are you from? Germany, that's a given. Which other countries? India? Yeah? Turkey, okay. Spain, very good. Ireland, okay. I don't know about Ireland. I do know in Spain, generally speaking, we can have three types of banks. And we'll see all of them in Germany. We have private banks. If we all team up, if we form a stock company and offer banking services, we are a private bank. Most of the banks you know are private banks. Bank of America, Citibank, Morgan Stanley, Goldman Sachs, Deutsche Bank. Those are private banks. Then we could team up as private households, and we could form a very communist, socialist idea of a company. We could say we compile our capital, and each and everyone chips in the same amount of money and has the same share in the corporation. Then this is a mutual company. In English, we call those mutuals because each and everyone has the same interest in the company. We do know mutuals, especially from the agricultural sector, where we could form an agricultural mutual company where we buy seeds and we sell our products. A credit union or a mutual bank is such a bank that offers the same services, but it's organized in the legal form of a mutual company. In German, we call this Genossenschaft. Yeah? And if you translate Genossenschaft literally, it would translate into comradeship. That's why I said, okay, this is sort of the most socialist thing you will find in a free market society, in a free capitalist system. It's a corporate form where everyone has the same vote. Yeah? And this is called Genossenschaft in German, or a mutual company or a credit union. And they do have special names in Germany. We call them Volksbanken, people's banks, or Volks- and Raiffeisenbank, or Spar- und Darlehenskasse. We do have several names for them depending on the region and depending on where they came from historically. Any idea which is the largest mutual bank in Germany? This is a trick question. Ever heard of APO Bank? APO, APO Bank. You can see some advertising when coming out of the main station. If you walk out of Leipzig main station, you will see a large ad for APO Bank on one of the opposite buildings. What is APO Bank? It's short for Ärzte- und Apothekerbank. It's the mutual banks of physicians and apothecaries. Why? Because if you, let's make a quick example, if you open a physician's office, if you are right out of medical school and you want to open an office for radiology, you need to buy 3, 4, 5 millions worth of equipment. You need to have an X-ray machine. Now, how to finance that? If you go to a regular bank, the regular bank will say, well, that's way too much. And at that point, physicians realize, okay, we need to have our own bank which understands our business, which understands our needs. That's when they formed Ärzte- und Apothekerbank, which is now the largest mutual bank in Germany. People usually don't know this. Third type is savings banks or savings and loan association. And this is where it gets tricky because every country has a different sort of savings bank. A savings and loan association in Germany is a Sparkasse. It's always called Sparkasse with a red S. But what is so special about a Sparkasse or a savings bank in Germany at least? What is the difference between a Volksbank, a Sparkasse, and Deutsche Bank? Who owns a Sparkasse? Huh?
What I have noticed is different cities have different Sparkasse, and
Yes.
when I move, I cannot, I still have to, if I live in Halle and I have a Sparkasse.
You can use the ATMs, for example, yes. But they have organized and they have, I will talk about this later on, they have a joint head institute so that, for example, you can use ATMs everywhere in Germany. But who owns? Who are the owners of your local Sparkasse? How are they called? Are you a customer of Sparkasse? No. Okay. No, you? You? Which one? Okay? But which one? Do you know which one? Okay. Niemand Sparkassenkunde hier. Was ist denn los hier? Die Sitten verfallen. I'm a customer of Sparkasse Unna-Kamen, my hometown. They merged, so it used to be Stadtsparkasse Kamen. And you can hear it in the name, Stadtsparkasse or Städtische Sparkasse or Kreis- and Stadtsparkasse. They are owned by the municipalities. They are government-owned banks. That's what is very special about Germany. We have a huge part of the banking system that is actually government-owned. I don't know about the Cajas de Ahorros in Spain. Are they owned by the municipalities? I don't think so. Yeah? In France, for example, we have the same Caisse de Dépôt. And in America, in the US, we have the savings and loan associations. However, they are rarely owned by the municipalities, by the government itself. That's very special about Germany. If you ever hear Sparkasse, it's government owned. It's owned by a city, a county, or a state. That's why we call this Sparkasse. And thus we have three sectors: mutuals, government owned, and private. That's also why many people take interest when it comes to research in the German banking system, because this is where Germany is really a nice laboratory for experiments in banking. In the United States, you only have private banks and mutuals. In some other countries, you only have government-owned banks because everything is centralized and government-owned. In Germany, you have the three, and they have to compete within the same system. Because of European Union regulations, the Sparkassen were stripped of their advantages and their special rights because the European Union said, okay, you can keep your government-owned banks, but please make sure that they don't have any unjust advantages and competitive advantages over, let's say, Spanish, French, or Italian banks. And naturally, under German law, you can just call yourself Sparkasse. If you were to form a company and call yourself Sparkasse, you would be fined and banned from the market. Ja? Sparkasse, Volksbank sind geschützte Begriffe. Sie können nicht einen Laden anmieten und sagen, ich bin jetzt Sparkasse Leipzig 2.0. Ja, das geht nicht. Also protected are the terms Building Society, Bausparkasse, and Investment Company, Kapitalanlage oder Investmentgesellschaften. Pretty clear. Okay. In addition to credit institutions, it gets more boring after this, I'm afraid. You can also find financial services institutions, Finanzdienstleistungsunternehmen, and financial companies, Finanzunternehmen. Why is that? Some financial services need regulation, but they shouldn't make you a bank immediately. For example, leasing companies. If you are only in the business of leasing, you are a financial company, but you shouldn't be a bank right away. That's why we have banks, credit institutions, deposit-taking institutions, securities trading companies, we have financial service companies and financial companies. Finanzunternehmen, Finanzdienstleistungsunternehmen, Kreditinstitute, Einlagenkreditinstitute, Wertpapierhandelsunternehmen, Wertpapierhandelsgeschäft. Financial companies are companies which are not credit institutions, investment management companies, or externally managed investment companies, and whose principal activities involve acquiring and holding ownership interests. You are, for example, a financial company if you are only in the business of buying stocks and holdings. If you're a holding company, then you're a Finanzunternehmen. Yeah? Leasing contracts, that makes you a financial company. Okay. Not that interesting, I'm afraid. And even different types of financial intermediaries, groups of institutions. Now, you in the back, you mentioned one interesting fact about the German Sparkassen sector. The German Sparkassen, they are all usually very small banks, and they only act locally. They only engage in local business. For example, I am a customer of my hometown Sparkasse, and some of you are probably customers of Sparkasse Leipzig. They have formed groups to organize, for example, a joint ATM machine system. They have specialized banks for mortgage loans, for securities tradings. We'll see those later on. So they have had institutions that organize marketing, lobbying, etc. And thus, these are groups of institutions that have some special paragraphs for them in the German Banking Act. Financial holdings, mixed ancillary services, we don't care about these. Something that is more interesting is bank assurance. Sometimes also written together, bank assurance. In German we call this Allfinanz. No layman knows what Allfinanz is in Germany anymore. What is Allfinanz? What is bank assurance? Bank assurance is the idea, if you're a bank or if you're an insurance company, you buy the other type and you form one financial conglomerate that offers banking and insurance. Why? Why would you do this? Remember your marketing lecture, if you have ever taken one. Cross-selling, 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 cross-selling. You want to open a checking account. Perfect. You need key insurance. Yeah? You want to buy a mortgage. You need a mortgage for your new house. Have you ever thought about home security and home insurance? Yeah? Those nasty accidents with aquariums, they happen a lot. So make sure you repay your mortgage and also get insurance. I can sell you both. Cross-selling is the main advantage of bank assurance. However, it's a very, very tricky question if this has ever worked in the history of finance. The last big example, does anyone know the last example in Germany of a huge merger that intended the same idea, bank assurance? Does anyone remember? Yeah? Yes and no. The merger between Dresdner Bank and Commerzbank is the result of the failed bank assurance merger a couple of years before. Allianz, Germany's largest insurance company, bought Dresdner Bank. They tried for a couple of years and then they realized it doesn't work, so they sold off Dresdner Bank to Commerzbank. Nowadays, many banks offer insurance services, but they do it differently. They don't form one company in one large merger. They just have the bank and they have an associated insurance company and they sell those insurance company products within banking and vice versa. If you look at Postbank, they also offer insurance products. Sparkassen and Volksbanken, mutual banks, they also offer insurance products, but they don't call them, here, this is our Sparkassen insurance company. Actually, they do in Bavaria and here in Saxony-Anhalt, at least in my home state, in North Rhine-Westphalia, it's, for example, for the Sparkassen sector, it's Provinzial. No? The insurance company has a totally different name. It's a separate insurance company, but they offer their products via their own distribution channels and via Sparkassen. And for the mutual banks, it's R&V Insurance, R&V Versicherung. That's Raiffeisen and Volksbanken Versicherung. The name is slightly different. Okay, that's bank assurance. Okay, any questions on the legal stuff? No. Functions of banks. What do banks do? Now, one way to define a bank is, of course, to say, well, let's look at the German Banking Act. Another way is to look at this economically and look at what functions banks fulfill. So let's take a closer look at those market functions that banks can facilitate or enable. Now, the financial market, very generally, is the place where people who have capital seek and find people who need capital. Some people want to invest, and some people, companies, firms, households need financing. That's what happens on a finance market, on a financial market. Now, the bank or anyone else can try to help coordination, allocation of capital, selection of market participants. It can help lot size transformation, maturity transformation, and risk transformation. This is a very practical approach to explain why banks exist. We will later on see, even though this is very intuitive, for every example I give you now, I can find a different example where one could say, well, we could organize this in a different way. And 10, 15 years ago, I would have said, well, yeah, that's not very practical. We need banks even for these practical reasons. We don't need an economic theory to explain the existence of banks, just to see that banks exist for a reason. Because let's be honest, a couple of hundred years ago, even in ancient Egypt and Mesopotamia, we had banks. So there must have been very good practical reasons why people came up with the idea, let's take in capital and give out loans. Now with the internet, with fintech startups, this is a more tricky question that requires a nuanced answer. There are actually some functions where I would nowadays say, this is not so trivial. And actually, if you open a startup, you could open that function even without a bank. Now let's get to our idea. I want to buy a car, you want to invest. You want 2% interest, I'm willing to pay 5% interest on a loan, and I want to buy a new car. First problem is coordination, allocation, selection. Why coordination? You have fewer capital, and it might be that at this point in time only you want to invest. That's not enough for me to finance my car purchase. Then next month only you want to invest, and I need to find you. So we have a coordination problem. Not enough capital is available at the very same time I need capital. Bless you. Problem is, we need someone to coordinate this. We need a bank that sits in the middle where you can bring your cash to, and I can say, I need a loan. Okay. Selection. Why selection? Because you simply assume that I will pay back my loan. As soon as I have a fast car, I'm gone. I can say, well, adios, and I'm gone. I'm taking your cash, and I will enjoy my life with my, well, not really. I'm not enjoying my life with a Toyota Prius, but it could be a Porsche or a Ferrari, and then I'm really enjoying my life. And you will suddenly realize that I'm a very fishy market participant. I was dishonest. I used capital, your capital, for different purposes than I told you. And this happens every time in a market. If you have market participants who shouldn't engage in that particular market, you need a gatekeeper. You need someone who says, you can give me your capital, that's okay. You want a loan, you get a loan, you don't get a loan. And particularly not you. You're a bad risk, you're a good risk, you're immediate, you pay 5, you pay 6, you pay 2% interest. Selection of market participants. We know this in a stock exchange. You are not allowed to trade. You are allowed to become a customer of a trading company, yes, but you don't have a license to trade on the New York Stock Exchange. You're not a trader. That's a big difference. You don't have a license. Okay. Lot size transformation. If I need 50,000 euros and you have 1,000, you have 2,000, we need to transform these lots into my lot. Losgrößentransformation in Germany. You have fewer cash. I want a big car. I need more capital. We have to transform the non-matching lots. Maturity transformation. What is maturity transformation? I want to pay back my loan for 10 years, and you want to have access to your capital every 3 months, at a 3 months notice. If you put your money in your savings account, You want to have access 24/7. You don't want to wait 10 years. So you want to invest with a maturity of 1 year maybe. I want a loan for 10 years maturity. Best example is a mortgage loan. Ideally, I would like to have a mortgage that I need to pay back over 20, 30 years of time. Now, it will be very difficult for me to find people who want to give me their capital for the next 30 years. So the bank might exist for a simple reason, because it transforms maturities. Yeah? Fristentransformation, we call this in German. Die Fristigkeit der Investition und der Kreditaufnahme wird transformiert. And risk transformation, again, I want to invest. This is my best example. Almost 15 years ago, I invested in one of the very first German peer-to-peer lending platforms. Back then it was called peer-to-peer, nowadays it's called crowd lending, crowdfunding. And I invested a small amount of my money during my PhD studies on this platform, and I still remember the proposals by people who needed, let's say, a small loan. And back then, this was basically loan shark business. Yeah? People looking for capital for the most absurd reasons, and people like me saying, well, yeah, I will give you 50 euros for, let's say, 14% interest. That's okay, yeah, based on the risk. And I still remember one proposal, and I have no idea if this person was serious. This person said, okay, I'm doing my job training, Ausbildung. So I'm 23 years old, I'm still in my job training, and I've just married, and I want to do a good vacation, and I need 15,000 euros for a proper vacation. I've never done a vacation for 15,000 euros. No big surprise, this person had a credit rating of F. Yeah, it started with AA, A, B, C, D, E, F. I invested, I think I got 15, 16% interest, and this person defaulted after 2 months. Out of 5 years it was intended to run. 5 years intended loan, intended maturity, default after 2 months. No big surprise. So you do diversification, I can talk about this later on. But risk transformation. If you wanted to invest risky, you don't want to invest risky, right? You have a savings account. And the savings account is for saving money. You're saving money. You don't want to invest. If you had wanted to buy stocks, you would have bought Nvidia. If you were even more risk-friendly, you would have bought GameStop yeah? Or Tesla stock. But you've put your money into your savings account, so obviously you are extremely risk-averse when it comes to that amount of capital. And I want to buy a Tesla. I want to buy a Ferrari. So obviously you wouldn't give money to me. But I need a loan, and you want to invest. So maybe banks exist because they are somehow able to pool capital and transform risk. Okay. Now all this makes sense. Banks, at this point you could simply argue banks exist because they can coordinate people, they can allocate capital, they can select and unselect market participants, they can transform lot sizes, maturities, and risk. Practically, yes, that's why they exist. But theoretically, and we are still a university, theoretically, this is not enough, because for every reason I've just given you, you can think about one counterexample that tells you, well, you could do without a bank. If you take risk transformation, you can do yourself. I mean, nowadays you can just do crowd lending. You can invest yourself. You don't need to go to a bank if you want to invest in a company. You can buy a stock. You can buy an ETF, an exchange-traded fund. If you want to earn a higher interest rate than on your savings account, you can do so because transaction costs have decreased dramatically. And if you want to buy one Tesla stock, well, do so. You don't need a bank for that. If you want to transform your lots, well, if I want to finance my car, again, I could do crowd lending. I can try crowdfunding and see if people want to give me capital. No? I don't need a bank for that. If I want to coordinate, allocate, and select, well, there are mechanisms for that as well. And this is not enough to explain every existence and every bank that exists. Coordination, allocation, selection. Well, I've talked about this. It seems to be more efficient and plausible to have a bank than not have a bank. This is not trivial. I have to check that. This might be my dangerous half knowledge, but if I remember it correctly, is anyone from Afghanistan here? No. If I remember this correctly, the university where I did my PhD, Bochum, back 17 years ago, they had a UN-sponsored program to teach university lecturers the basics of banking. They basically sat in a course like this, and they were taught the basics of banking, because in some parts of the world, the concept of banking is unknown. It's not just that people don't always have a bank account. Yeah? That's the problem of unbanked households and the unbanked citizens. Yeah? In Germany, we just take this for granted. Yeah? In Germany, we just say everyone has a bank account, and the bank account should be, it shouldn't cost anything. Yeah? We are very used to having a free bank account, everyone. But in some parts of the world, even the concept of banking is unknown, because people just think, okay, why should I lend? Why should I take deposits? What benefit would I get from having a bank? And in these parts, and I think that was the case with Afghanistan in 2005, 2006, banking to some extent was forbidden. It's still forbidden under Sharia law. You need other legal constructs to offer banking services. And for historical reasons, some of these countries have never had this type of banking industry. It's the same, for example, with insurance. I still remember the former president of Dortmund University. He's a mathematician. And when he retired, he went to Ethiopia and taught insurance mathematics. Because in many parts of the world, you don't have insurance companies. Why should you need an insurance company? You can have an economy without insurance. It's more costly, and you have social problems, but you can do without. It's not vital to the existence of a modern economy. And Ethiopia at that time didn't have many types of insurance contracts. For example, they don't have health insurance. And they started out with very simple property and casualty insurance, car insurance, for example. So it's not trivial to think about this question, why do banks exist? If there are countries that don't have banks or have not this type of banking sector, it needs to be justified. Okay, lot size, maturity transformation, we've talked about this, and risk transformation. In addition to these very abstract theoretical functions, they also fulfill important functions for an economy. First, creation of money. And this is, if you want to discuss this, I will take a time out and leave the room. This has become one of the most controversial topics in the German political discussion stemming from left-wing activists. Why? And this is not that clear. I will later on show you a very simple model with which you can explain that banks create money out of nothing. Why is that? because they can give you loans and they can grant loans based on what they have on their balance sheet, but with a multiplier. So in a very simple example, I open a bank. I have 1 million in equity, and you chip in 1 million in debt. So you are debt investors. You give me debt, for example, in the form of bonds, and I have 2 million in cash. Einfaches Beispiel, 1 Million Eigenkapital und Sie sind meine Fremdkapitalgeber, Sie geben mir 1 Million Fremdkapital. I now have 2 million euros that I can give you out in loans. For example, you want to buy a house, you get 1 million, you get 1 million. Very simple model. But I could start a bank just using 2 millions, 1 million equity, 1 million debt, and I give out 2 million in loans. Now, in a very simple toy model of money creation via banking, you could argue, well, you don't need to have that amount of cash if you give out loans. If you're able to pay back at least a part of the money you've taken in as debt, you can give out more loans. And in this model, I would say, okay, I've taken in 1 million in deposits from all of you, and for some reason, I can give out 3 million in loans. As soon as I fulfill some regulations and I'm able to pay back at least the usual amount of deposits, there is a model that says, okay, you can give out more loans. And I can create money because I'm giving out loans, right? Okay. Now, supply and creation of money is very important, but it's also highly controversial. If this model is right, if this is something that is good, if this is something that is bad, left-wing politicians and activists will give you a hell of a time when you discuss this in financial economics, because this amounts to banks are bad because they're creating paper money and this is nothing of value and this is very bad for the economy and we shouldn't do this. And the model isn't right. I don't want to go into this. If you're interested in this, go to our economics department and take a class in financial economics, not banking. Ja? Ich sage das deswegen, ich sage es auch auf Deutsch, die Geldschöpfung im Bankensektor ist das Lieblingsthema von allen linken Politikern und Journalisten. Hören Sie sich eine Folge Jung und Naiv an und Sie werden mindestens, ganz schlimm irgendwie beim Wirtschaftsbriefing von Jung und Naiv, und Sie werden mindestens 20 Minuten über Modern Monetary Theory, MMT, 20 Minuten über die Geldschöpfung, weil das stimmt ja alles nicht. It's all wrong. It's modern monetary theory that is the only, this is the way. Yeah? Everything else, macroeconomics, financial economics, they have it all wrong. It's all bad. Modern monetary theory is the way to go. No. Again, I'm doing management here. I'm doing banking. I'm not engaging in that discussion. Just please make a note of it, that this is not written in stone, and this is highly controversial right now in Germany and in macroeconomics in general. Yeah? Geldschöpfung. But providing liquidity and facilitating money transfer, that's hugely important. If you imagine a world, Germany, US, where suddenly all banks would disappear, how would you pay your rent? How would you pay in a store? Where would you get your money from? In the very end, banks fulfill at least one very important, vital, systemically important function in a modern economy. They offer payment services, Zahlungsverkehr. If all banks were gone by tomorrow, you would not know how to pay your bills. You would suddenly start cramping up, I don't know, stone money. You would start paying with your iPhone, but not with Apple Pay, but you would give it in. Yeah? So payment services is extremely vital. And that is why banks are special. Banks need to be regulated. banks have a special place in an economy because they facilitate and they offer payment services. Do we need them anymore? Well, with Apple Pay, Google Pay, etc., at every corner, you could also argue, well, we don't need banks any longer because we have Apple Pay. But what are they doing in the background? They are a bank again. One thing I have not on the slide, another main function and important function of banks in a modern economy, an economic function. What is one of the main functions of banks? The general consensus with most people, again, not the extreme left wing, is that banks are good because they offer lending. They give out loans. Now, the idea is, if I'm a bank with 2 million and I create capital, I create money, and now I can give out 1 million to you, 1 million to you, and you are a firm and I can give you a 3rd million, and you buy a machine, you hire 5 new people and you grow. Yeah, you can see where the criticism comes from, growth, degrowth. But I can give out a loan to companies, and companies create jobs, they make money, of course, they make profits, and they create jobs. And thus we can force, or no, not force, but we can enable economic growth. That's why banks are so important. Why do you think the European Central Bank decreased interest rates to way below 0%? It had nothing to do with inflation before we got inflation back. It had to do with lending. We wanted to spur economic growth. And if you are the economy, and each and every one of you are households and you are firms, how do I as a central bank spur growth? Wie fördere ich Wirtschaftswachstum? I lower interest rates, central bank rates. You suddenly realize I don't get any money on my savings account. What do? Spend money. If you can't earn $1 on your savings account, what's money worth? You can spend it. You can buy a Ferrari. And Ferrari suddenly realizes people all are starting to buy Ferraris. So we need an additional plant. We need to hire people. We need to produce more cars here. So we have more jobs, more production, more consumption, and in total, more economic growth. At least that's in theory the idea why central banks, by lowering interest rates, via bank lending, can spur economic growth. And more practically, this is, I guess, theory, and this is, of course, wishful thinking on parts of central banks. But why is it important to have lending? If you are, for example, a company and you want to invest, and you have to wait for a couple of people to give you a loan, it's much easier to go to a bank and get a loan right away. So having easier access to capital enables you to invest more quicker. So lending is good. Loans are good for the economy. And that's also why we would say in a modern economy, you need to have a banking sector. If you don't have banking, well, your economic growth will probably be restricted. So money creation, Geldschöpfung, Payment Services, Zahlungsdienstleistungen, und Kreditvergabe, lending. Those are the definitely three main important, systemically relevant and economic functions of a bank. Okay. Commercial versus investment banking. Everything I've talked about now is basically commercial banking, Geschäftsbanken, commercial banking. Does anyone know what the difference is between commercial and investment banking? When I studied, like you, I didn't learn what the difference is between a commercial bank and investment bank. What is Sparkasse? What is a Sparkasse? Commercial bank, investment bank. Sparkasse is commercial. What is Deutsche Bank? Tricky, it's both. Commercial banking can be defined, sometimes also traditional banking, lending business. Commercial banking is deposit and loans, taking deposits and granting loans. Deposit business, loan business. Geschäftsbanken, Commercial Banks sind ganz klassisch im Einlagen- und Kreditgeschäft. Deposit taking, granting loans. What is investment banking then? It's difficult to define. Usually you define investment banking by saying offering capital market services to wholesale and institutional investors. What does that mean? Every banking service that is related to capital markets and that is offered to wholesale or institutional and corporate customers. So first thing you need to see is, all of you will never have any interaction with an investment bank. You're a household, you're a private household, and you're not a company, and you're not an institutional investor, and you're not in wholesale funding. So, your retail business, so you will never see an investment bank. Full stop. Investment Banking ist ein Geschäft für Geschäftskunden, für Großkunden und nicht für Sie als Kleinkredit-Privatkunden. Deswegen das eine nennen wir Privatkundengeschäft, Retailgeschäft, das sind Sie und ich. Das andere ist Großkunden, Geschäftskunden, das ist unter anderem Investment Banking. And investment banking is every banking service that is offered to giving institutional investors or corporate customers access to capital markets. You can see this from Deutsche Bank. Deutsche Bank doesn't call it investment banking segment in Deutsche Bank Investment Bank. It calls itself capital markets. It's a capital market segment of Deutsche Bank. So what does it mean? What kind of services would you expect in an investment bank? Yeah?
Restructuring, mergers and acquisitions.
M&A, mergers and acquisitions. Restructuring. Restructuring is another fancy word for you're almost bankrupt and you need capital. Yeah? You're doing badly and you need fresh capital. Then you restructure. Yeah? Most of them. Trading, securities. You want to buy stocks. You want to sell stocks. Debt financing. IPOs. You want to go public. You want to do an IPO, initial public offering. You want to finance yourself with issuing a bond financing. And everything else. Everything else with which you get access to capital markets. Zugang zu Kapitalmärkten. Das ist das Investmentbankgeschäft. Wenn Sie als Großkunde, ja, also Großkunde heißt jetzt Firma, Unternehmen, wenn Sie sagen, ich will Aktien emittieren, ich will an die Börse, IPO, Investmentbank hilft Ihnen dabei. Wenn Sie eine Anleihe emittieren wollen, über 1 Milliarde, weil Sie 1 Milliarde Fremdkapital brauchen, hilft Ihnen die Investmentbank. Wenn Sie sagen, ich will eine andere Firma kaufen, ich will mergen, Investmentbank. Wenn Sie mit Wertpapieren handeln möchten, Investmentbank. So that's an investment bank. You can see a lot of services you would never use as a private retail customer. So, commercial banking includes deposit taking and lending. Investment banking is everything else related to asset management, trading, raising capital, issuing bonds or stocks. An investment bank is thus a financial institution that helps their clients with wealth management, raising capital, trading securities. And they do not take on deposits. And this is important. Depending on the country you are in, and depending on the time you're in, and the era, sometimes banks can do both. We call this universal banking. They can do commercial and investment bank. Sorry. They can do both at the same time, or we have a separate banking system, meaning German Trennbankensystem. You can only be a commercial bank or an investment bank. It all depends on the question if you take on deposits or not. Why would you separate the two? Investment banking is much riskier than commercial banking. Commercial banking is boring, traditional old banking that a Sparkasse does. Taking on savings and deposits, giving out small loans to people. Okay, maybe some firms. Investment banking is being the wolf of Wall Street. Yeah? Trading, securities, doing IPOs, M&A, working until very late at night, doing fancy PowerPoint presentations and making a lot of money. If you do both, the regulator needs to make sure that losses from high-risk investment banking do not endanger deposits. If they do, you should think about a separate banking system. Do you know when we had a separate bank? Germany has a universal banking system. Deutsche Bank, Commerzbank, they do investment banking and commercial banking at the same time. It's allowed. Do you know at which time where we had a separate banking system? In the US, after the Great Depression in the 1930s, as a result of the banking crash in the Great Depression in the 30s in the United States, the US installed a separate banking system where banks were not allowed to do commercial and investment banking at the same time. And you can still see this in everyday politics. Any idea? You know Bernie Sanders? Yeah. At least if you're a little bit interested in US politics, you know of Bernie Sanders. And one of the main things Bernie will say is, bring back Glass-Steagall. Glass-Steagall, the Glass-Steagall Act in the 1930s was the law, the act in the US code that installed the separate banking system. And later on, during the Clinton administration, they deregulated the banking sector and they allowed banks to do both. That was called the Gramm-Leach-Bliley Act. And famously, I think Paul Krugman said, no people did more to cause the financial crisis in the mid-2000s than Gramm-Leach-Bliley. Because during the Clinton administration, they repealed Glass-Steagall. That's why Bernie Sanders still runs around and saying, bring back Glass-Steagall. Let's separate commercial and investment banking again to make the bank system more secure, safer. In Germany, we have a universal banking system. Deutsche Bank does both. And every now and then you hear, investment banking is having problems, or investment banking segment is doing so very well. So every now and then they have problems in their investment banking, and they concentrate more on retail business or investment banking. But that's why we do make this distinction between commercial banking and investment banking, and that is why in every country and in every era you have different regulations and laws in place that make universal banking possible, or they have strict restrictions on that. Yeah? Okay. Any questions? So now you've learned about the German Banking Act. You now know what Bernie Sanders is talking about all the time. You know about modern monetary theory and the fact that I do not want to talk about this. If you have no questions, thank you for your attention and see you in 2 weeks, because next week is a public holiday. Thank you.